Another monumental thing has happened in my life, and I thought, why not share the journey again? Welcome back, or hi if you're new. My name is Beryl and I'm officially a homeowner. In this video I will be sharing my first time buyer experience, although I must disclaim I did not buy this house all by myself. However, I can only speak from my own experience. If I miss anything out or you have any questions throughout this video, please pop them down below and I will do my best to either answer them, or if there is a lot of questions, I'll do a Q&A in another video answering all those questions, because I try to put all my thoughts together, but there is a lot to go through when buying a property, and I'm sorry it's going to be a lengthy video, but I just want to help everyone out there who's going through the same journey as us. We decided to buy our home from Taylor Wimpey, and I thought I would share our experience and journey from our first viewing to completion day, and our experience with them, why we chose to go with them, and all the things we learned along the journey of being a first-time buyer. So I will be breaking it down. If you're interested to find out a little bit more about what it means to be a first-time buyer, or you're more interested in the Taylor Wimpey side of things, stay tuned because I'll be discussing it all. So there's a lot of things available in the UK for first-time buyers to get on the property ladder, starting with the whole Help to Buy scheme. So to break it down, Help to Buy is a government-run scheme. There is various different things under that branch. I think the most common one that everyone knew was the Help to Buy ISA, which everyone rushed to open an account and put £1 in and probably never deposited anything else since. Now, it can be good and bad, because I opened one before it was even a thing, because I've been saving up for my own home for about a solid 3 to 4 years, so it didn't happen overnight. I have been working, I'm trying to get jobs to obviously make this come true. I've been opening various savings accounts to save my deposit, various ways of saving money, so I ran a spreadsheet, but that's a totally different subject to what our experience was. So the Help to Buy scheme is there to get you on the property ladder. It is only for new build properties, so you cannot use the Help to Buy scheme if you're buying a second-hand property. It is for new builds only, and it is only for first-time buyers. So if you've ever owned a property in or outside the UK, you're not eligible for the Help to Buy scheme. Now that we've got that cleared up, Help to Buy ISA. The Help to Buy ISA was an account you could open with any high street bank. It's a form of a savings account that you could deposit a total of £1,200 in your first month, and then every month you could deposit a maximum of £200. Now you can either reach the total amount of savings you can have in that account, which is £12,000, or you can have the account for 5 years. It is a good account because it earns you higher interest than normal savings account. So I did have one before the rush came in, and I did deposit the full amount every month. I was very adamant on keeping that account up for those perks, but also I was under the impression that with the Help to Buy ISA, you get given a 25% grant from the government on top of your savings. Now, a grant means money given to you by the government for free, no feelings attached, you don't ever have to pay it back, and it's the best form of free money you can get. Now, with that, there comes some terms and conditions that the bank never made me aware. And the most important one is that you are only eligible for the 25% extra grant if your property value is less than £240,000 purchase price. This also depends whether the property is in or outside of London, so your solicitor will be able to advise you, and I think mortgage advisors should be able to advise you as well, whether this will be eligible for the grant or not. So unfortunately ours wasn't. I was banking on that 25%, but no matter how many mortgage advising sessions I went for with the high street bank, no one told me until our solicitor called, because one thing that my bank made me sure is do not withdraw any money at all whilst I have this account if I'm planning on using it for property purchase, because the solicitor has to request the withdrawal of the money to make sure that you're using it for the purposes of purchasing a property, so the government can give you the grant. And because we were purchasing the property, obviously I let my solicitor know that I have an ISA account, a Help to Buy ISA account, and that I need obviously a solicitor's request to confirm I'm purchasing a property, I'm using the money for a property purchase to get that grant. To my surprise, he then said, unless, well, we don't qualify because the house is over 240,000, it's outside of London, blah blah blah, it just didn't qualify for the grant. So I was, I missed out on 25%, which to my savings was about a £2,000 difference, which would have made a lot of difference. So we lost on that. So I just want to make you aware, because no one told me until I was in the process of buying. So next is the Help to Buy equity loan. Okay, equity loan. This is another part of the Help to Buy scheme for first-time buyers, run by the government to help you get on a property ladder. Now, just to let you know, the government requires you to have a 5% deposit contribution towards your own home. That is great, but sometimes impossible. Not to save up, that also, but also to be allowed to purchase a home with 5%, just because of your income, the value of the property, and the percentage that the mortgage lender will give you. It is very rare for mortgage providers, i.e. high street banks, which are most commonly used, to give you a 95% loan against your home. And it's also very dangerous to do so, because if interest rates change, and it can go up above 5% if you're on like a variable interest, and this is something I was very warned about, is because interest rates can change all around. If for whatever reason the mortgage interest rate becomes higher than 5% or close to 5%, the mortgage value will then take over the share that you own. I don't know if I've explained this well, but basically the 5% you own, if your mortgage increases by 5% interest, that 5% interest or 5% you've put in is now covered, and the bank can technically own 100% of your home. I don't know if I've explained that well, but it just makes sense the way I was advised at the time. So it can be a very good thing, but it can also be very dangerous. So the Help to Buy equity loan also helps towards that. So because the developments only require you to have a 5% deposit, banks don't usually give you a 95% mortgage. The equity loan can give you 20% loan towards your home, or 40% if you're in London, but I believe the property value can't exceed the value of 600,000. So I can only speak from our experience, and to lay it out, when we were speaking to mortgage advisors, and whether that was the bank or the development's mortgage advisors, which were brilliant, and every development has their own set of advisors, like panel of solicitors and things like that, which is great because they can help you a lot, and they deal with the development on a day-to-day basis, so they know what they're doing. But back to the equity loan, the mortgage advisor they advised that they wouldn't be able to provide us with a mortgage with 5%, not even 10%. They were requiring 15% deposit to be able to secure the house, and including the Help to Buy equity loan, which was another 20%. So really, we would have had to have a 35% deposit ourselves to be able to put money ourselves into this house without any additional help. The positives of the Help to Buy equity loan and why we weren't like afraid to go for it and take up another loan, because on top of a mortgage, to take up another loan, it just sounds like you're digging yourself a deeper hole. But this equity loan is interest free for 5 years. You only have to pay £1 a year within that 5 years. And then after the 5 years, the £1 like management fee will continue, but you only have to pay 1.75% of your loan. So if you take on the full, you don't have to take up the full 20. So if you only need 10, 5, you take how many you want, but you can have the opportunity to take up to 20% if you're purchasing a property outside of London. If you're in London, up to 40%. So after the 5 years, you would only have to pay the interest of 1.75%, which when I calculated against the amount that we were looking to borrow, which was the full 20%, really it was like a phone bill, which at the moment phone bills are ridiculous with their fees. But let's think back to like earlier phone bills when they were about like £30, I would say. So it wasn't breaking the bank, but it was helping us get somewhere further. And yes, it would mean that the government owns 20% of equity in our home, but when you want to get on the property ladder and you wouldn't have the money anyway, and we're talking, I think for us it was another, I think something like £70,000, which we could never do. I mean, my partner and I, we saved up 10% deposit, which was £30,000, and even then it wasn't enough. So yeah, it took us at least, well, it took me 4 years to save that money up to be able to just give it away and put it into a property safely without obviously causing myself any financial issues. So it took us 4 years. Imagine how long it would have taken us to save up another £60,000-70,000 on top of that. Like, you know, we would be living with our parents for a very long time, and obviously that wasn't what we wanted. So the government has this equity loan scheme for you to use if you don't want to be in the same boat, and we did. So far we are hoping to, you know, save some money up and start repaying more, which you can. There is for an early repayment, like if you pay off, so if you were to, I don't know, win the lottery or get a much better job, if you do decide to pay it off early, it gives you the opportunity to pay off in one lump sum, or I think 2 installments. But there is like a fee, I think, if you pay it early, like way early, I think like within a year or two, I think there's like a 5% interest charge on paying it back early. So yeah, but we shall see further down the line about how this goes. We have 5 years. I feel like for 5 years, which we are hoping to spend in this house, it's our little starter home, we don't have to think about any additional interest. £1 a year for 5 years ain't gonna hurt the bank. And I think further down the line, if we do decide to stick with this house, 1.75% isn't a lot. And then if we do decide to sell the house in 5 years' time, we have to give 20% to the government. So essentially that's when we would be paying it off. And I feel like we didn't have the 20% to begin with. In 5 years' time, the property value will increase. It has already increased about the fact that it is completed. It will increase furthermore as the development completes and any further changes being made to the local area, things like that. So, and even then, property value never really decreases. So when people say, oh, property prices are cheap, it's cheap compared to that year's figure, but it's still higher than what it was last year. So to my understanding, property values will never be like low. You can never make a proper loss on a property, because yes, it'd be a loss compared to what it should be, like predicted that year, or what properties of that value in a similar area would be costing. But if you compare it to previous figures, property values have always increased. Even by a little, it's still increasing. So you will never eventually like really make a loss on a property. And this is how I understood it from all the research and advice that I've taken on before we bought a house. So I hope this explains equity loan. I can only advise to go for it if you don't have the means to go without it. I know a lot of people didn't, like, they don't go for it. Maybe they have family that can assist with that, or they actually have the funds to do so. But we did, and so far, you know, I can't complain. It's £1 a year. We haven't even been here a year. We'll think about it after the 5 years, see where our lives are, see where it's going. But yeah, I hope I've laid the points down, and if you've got any further questions, pop it down below. I think equity loan is the most difficult part to explain. To me, it took a lot of research, but the website actually lays it out quite clearly, how it works. There's diagrams, there's all sorts. So I'll leave the link down below for you to do your additional research, but I hope that helps.